What's up everyone, it's Scotty with Money Investing. In this video, we are going to be analyzing a brand new company. This is a company that we have talked about in the past. It is a dividend aristocrat, and they are going to be reporting earnings next week. So I'm going to break down exactly what my intrinsic value is on this company, and we'll also talk a little bit about the earnings expectations. We'll go over everything, revenue, EPS, we'll go over share dilution, we'll talk a little bit about the balance sheet, and more importantly, the risk factors with this company, because it definitely does have quite a few risks associated with the actual current business. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. I recently posted a brand new members only video going over 17 stocks that I consider to be very, very high quality, high growth, and my fair values and my buy targets as well. So this was a video that I posted for members only. 17 growth stocks that I'm actually planning to buy with my fair value and my buy targets and my no-brainer buy targets as well. So I give you the whole list and I give you the entire fair value for these companies as well. So super helpful, super valuable. If you want to take advantage of that, again, link's going to be down below. And we recently also announced and launched our options course. Super excited for that, and you will get access to all the tutorials, all the videos, over 20 plus lectures. There is currently a 50% off sale. Coupon code is going to be launch if you want to take advantage of that as well. And we also do have the bundle now. Bundle has all three courses, the fundamental analysis, technical analysis, and options course, all for 50% off. So you get all three courses with over 100 plus lectures and videos and over 20 plus hours of content. So many Excel spreadsheets. Literally, this is everything you need to know for analyzing stocks, trading, technical analysis, fundamental analysis, and of course, trading options as well. So the company that we are talking about today is going to be 3M. 3M is going to be reporting their numbers next week, and the earnings expectation, as you can see, is going to be $1.73 with just a little bit under $7.9 billion in revenue for the company. The company, unfortunately, has been struggling with a legal battle. Lawsuits have been piling up for 3M as well, but as we know, it's a very defensive company. It does make adhesives, cleaning supplies, coatings, paint, insulation, lab supplies, labels, lubricants, medical products, you name it. So they've got over 60,000 products, but unfortunately, it is facing legal liabilities. The company is facing lawsuits related to the use of PFAS chemicals and its sale of combat arms earplugs. And this is, again, a group of man-made chemicals that are known to be harmful to human health. And 3M has been accused of polluting the environment with PFAS chemicals, and it's facing lawsuits from people who have been harmed by these chemicals and combat arms earplugs. They're also facing lawsuits from the U.S. military personnel who claimed that the company's combat arms earplugs were defective and caused them to suffer hearing loss. And the earplugs, which were sold to the military under the brand name Combat Arms Earplugs version 2, were designed to protect soldiers from hearing damage caused by gunfire. However, plaintiffs alleged that the earplugs were not effective and they allowed too much sound to enter the ear canal as well. So again, there's a lot of legal battles happening with 3M. That's one of the reasons why the stock's been absolutely destroyed. And from its recent highs of 190, it is down over 50%. Trading at just about $104 per share. Of course, a lot of volatility has been in and around these August of 22 when these lawsuits were first announced. And of course, they sold off over 28%. But since then, they've just been slowly and steadily kind of drifting sideways and even lower. So going back over to the actual numbers and, companies' revenues and whatnot. So they have been able to keep very consistent with the revenues, gone from like 30 billion to over 34 billion. So very, very small amounts of growth here. Gross profits gone from 14.7 billion to $15 billion. So again, it's a very stable, very stagnant business. It's a very value-oriented business, so to speak. And operating income's gone from 6.6 billion to $5.5 billion. So again, a very, very consistent, very stagnant business overall. And this right here is going to be their diluted earnings per share, which has consistently grown because of the share buybacks the company has done. So from 672 all the way up to $10 per share. That's over a 60% growth on over a 9-year period. And diluted share count has gone from 693 down to 562 at the moment. So if you plug in some of those numbers, so we're going to do 693, 572, I believe was that number, 562 was that number. So they have basically bought back shares by about 2.3% every single year. Now, going over to the actual profitability margin, so 42% gross profit margins, net margins at over 16%. we got very good return on equity, decent return on capital, and really good return on assets for the company as well. So it's a profitable business. Balance sheet, not the best. They are sitting on about $17 billion of net debt. Actually, $13 billion of net debt, so $17 billion of total debt with a little bit under $4 billion of total cash. So we're sitting at just under $13 billion of net debt with a current ratio that's over 1. Quick ratio is under 1, so that's not good. And debt to free cash flow also very high at over 9 for the company. Now, because of these lawsuits and because of the fact that it's been selling off so much, the valuation is low, 11 to 12 times earnings with a little bit over 1.7, 1.8 times sales and just under 10 times cash flow for the business as well. So I'd say a decent to low valuation. Earnings expected to pretty much decline this year by about 14%. So 862 and to grow to 1110 for the company. So 862 all the way up to 1120 was it, or 1110. And that's going to be a growth rate of about 6.5% over the course of the next 4 years. So again, that's a very, very small value-oriented stock at the moment. So if you plug in, let's say, $10 billion or no, $5 billion here, that's about 890. So we can go off of that. And let's just plug in some of these numbers to figure out, okay, what is going to be that intrinsic value for the business. And then finally, if you come over to the earnings expectations, again, $1.73 is going to be that EPS with just under $8 billion in revenue expected from 3M. So if you plug in, let's say 6% growth rate and we go with, let's say, a 12 times PE multiple, discount rate's going to be a little bit lower because they do pay a pretty hefty dividend right now, 5.75%, but that dividend could also come under pressure as the company is expected to pay a lot of litigation fees and settlement fees of close to $1 billion, couple $1 billion per year, which again could eat into the free cash flow and profitability. So we're gonna expect the margins and the actual earnings and the dividends to come down. So let's just go with 3% dividend after the cut. Let's just price that in, and let's just go with a dividend discount rate of 9%. And I'm going to plug in a 20% margin of safety because, again, they are dealing with a lot of potential liability here and a lot of headwinds. So we get down to a fair value, which is going to be close to $84 per share. And the stock right now is close to $104 per share. So there's a lot of conservative estimates based into that, baked into that intrinsic value. We're going with a very low growth rate. We're going with a moderate to reasonable PE multiple. Lower discount rate, 20% margin of safety, consistent share buyback as well, and that's going to be that sensitivity grid for 3M as well. So that's going to be sitting roughly at $84. Now, a couple headwinds and a couple risk factors for this company obviously are going to be the fact that liability is pretty high and there's a lot of uncertainty with respect to these lawsuits, and the balance sheet isn't fantastic either. They are sitting on over $13 billion of net debt, so definitely more debt than cash on the balance sheet is something to also pay attention to for this business. Now, going over to the technical analysis, we are seeing a little bit of a recovery potential here, considering that it's been selling off. So you can see the RSI and the MACD very, very oversold from a monthly chart standpoint, and we have seen pretty sizable increase here of 84% back in 2020. But since then, since June of 2021, it's been selling off pretty consistently, down 51%. So we've got a very strong support, almost exactly where the price is trading right now. So you can see that this right here has been a very nice support. Every time we come down to this level, we see a lot of buyers step in. This right here was once again in January or April of 2020. This right here was back in September of 2015. And once again, we're seeing June of 2023, a potential opportunity for a reversal for 3M as well. And if you do see a breakout back above 106, that 200 simple moving average, I wouldn't be surprised for it to trade back above 130. That's going to be that next resistance to also pay attention to for 3M. So for me, this could be a swing trading opportunity, but not anything that I invest in anytime soon, just considering all the headwinds and the potential liability that I mentioned with this company, and the balance sheet isn't fantastic either. So it does represent a good swing trading opportunity, but maybe not so much from an investment standpoint, even though it does offer a pretty high dividend. That dividend's kind of subject to getting cut because of the free cash flow compressing because of all the settlement fees the company might end up incurring. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget, we do have the options course and the bundle currently 50% off. Coupon code's going to be launch. And of course, you can join our Discord and our Patreon to get access to these private videos as well. Make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. Link to our Discord, Patreon down below. As always, happy investing. I'll see you all in the next video.